It's Wednesday, November 27th, and you're tuned in to the Stock Market Daily News Podcast, your concise source for the top market moves. Yesterday, U.S. stocks surged as the S&P 500 climbed 0.9%, the Nasdaq rose 0.6%, and the Dow Jones added nearly 1%, all fueled by growing optimism that a Fed rate cut may be on the horizon. Today, we'll break down the rally's undercurrents, from Big Short legend Michael Burry betting against AI giants to flexicap funds dominating October inflows, and where value investors are hunting for bargains outside the AI spotlight. Let's get into what matters for your money. Our first story, hopes for a Federal Reserve rate cut, sent global stocks higher for a third straight day. U.S. indexes led the charge, with the S&P 500 closing at 4,649, up 43 points. This momentum spilled into Asia overnight, as Japan, South Korea, and Australia opened higher, driven by soft U.S. consumer confidence and retail figures. Weak spending signals that the economy may be cooling, reinforcing bets that a Fed rate cut could come as soon as next month. The 10-year Treasury yield dipped below 4% for the first time in nearly a month, while the dollar dropped to its lowest in a week. For investors, the message is clear. Softer economic data is shifting rate expectations and adding fuel to the year-end rally. Next up, Michael Burry, famous for calling the 2008 housing crash, is making headlines again, and this time, he's betting against AI darlings. In a fiery post, Burry called NVIDIA's recent memo to Wall Street disingenuous and disappointing, and disclosed that he holds put options against both NVIDIA and Palantir. His chief concern? That AI companies are accelerating depreciation assumptions and could soon face painful write-downs if new chips quickly render old assets obsolete. Since early November, NVIDIA has tumbled 14% from its high, while Palantir dropped 20% after earnings. The takeaway: not everyone's buying the AI hype, and heavyweight skeptics are raising red flags about overheated valuations and aggressive accounting. Our third headline, flexicap funds are leading the pack when it comes to equity mutual fund inflows, pulling in a whopping 8,930 crore rupees in October. With rich valuations in pockets of the Indian market, financial advisors are steering investors toward flexicap strategies for one big reason: flexibility. These funds can allocate freely across large, mid, and small-cap stocks, giving managers more leeway when markets get frothy. If you're a moderate-risk investor looking for broad diversification in a single fund, flexicaps are increasingly in focus for steady, 5-year-plus investing. Now, let's turn to value investing in the era of artificial intelligence. While the market is enamored with mega-cap tech, Hotchkiss and Wiley's David Green is sticking with the unloved. His Value Opportunities Fund, which avoids the AI euphoria, has stacked up positions in names like Workday, Ericsson, and even U-Haul, all trading at discounted valuations and boasting market dominance. Workday, for instance, is down 11% this year and trades near 5 times sales, a level usually reserved for takeover targets, not tech leaders. U-Haul, meanwhile, has dropped nearly 30% year-to-date, despite its unrivaled market share. For investors, the lesson is that markets eventually broaden out, and disciplined value hunters may find gems where AI mania has cast a shadow. Finally, in commodities, oil prices steadied after hitting a one-month low on signs of progress toward peace in Ukraine, while gold edged higher by 0.2% as traders positioned for a possible cut in interest rates. Currency markets reacted, too, with the dollar sliding and the yen eyeing a possible Bank of Japan rate hike due to inflationary pressures from a weaker currency. To recap, stocks rallied on fresh Fed rate cut optimism, AI giants are under fire from high-profile bears, flexicap funds are attracting record inflows, and value investors are mining the overlooked corners of the market for opportunity. The S&P 500 finished at 4,649, the Dow just over 36,000, and the Nasdaq at 14,623. Looking ahead, keep an eye on this week's major economic data, including jobless claims and inflation readings, plus updates from the Bank of Japan and more guidance from Federal Reserve officials. For daily updates and sharper market insights, don't forget to subscribe or follow us. Thanks for joining the Stock Market Daily News Podcast. We'll see you tomorrow.